Hey guys, welcome back to Andrew Invests. On this channel, we like to discuss stocks, and specifically today, I want to talk about Disney. In the business, there's a saying, never bet against the mouse. And today, I want to explore whether that's actually true with regards to Disney stock. I must say before we get into this that I'm never advocating for short selling because the losses from short selling are unlimited, whereas the gains are limited to 100%. Whereas obviously when you buy a stock, it's the opposite. You can have unlimited gains and your losses are only 100%. So recently, an investing channel that I occasionally watch, Everything Money, did a video on Disney stock and talked about the bull hypothesis for it basically, which is that if Disney can recover its free cash flow back up to pre-COVID levels, i.e. was COVID just a temporary blip for the company, it could be a really good value buy at the moment. Let me roll that clip now.
How long will it take them, and is it possible for them to get back to the regular profit margin? Now, my guess is, why wouldn't it be? They've added a ton of revenue. It's in a high margin business like Disney Plus. Right?
Yeah.
And when you add that, and you have the parks back open, and they're increasing the cost of the parks, etc.
Actually quite surprised that their net income didn't rebound.
I think they're kind of missing the forest for the trees here because Disney will find it extremely difficult to reach the same kind of profit margins as it had pre-COVID. The entire landscape of the business has changed. And I really think that's a big weakness of their analysis and many other people's analysis, where you focus on the financials of a company solely and ignore the story of the business and the fundamentals in that way. To understand why this is, we can look at Disney's earnings pre-COVID in 2019 and see how profits and revenue were split between the different segments of the business at the time. So if we look, for example, at media networks, which is the cable businesses of Disney, including ESPN, the Disney Channel, and many others, we can see that they had $7.4 billion of profit out of a total of 14.8. So around 50% of their profits was from their cable business, whereas around 40% of their profits were from parks. Studio entertainment also made up a small amount as well. Whereas in 2022, we can see here that now the Disney Parks experiences and products segment of the business has grown massively to a rather unwieldy 62% of operating income. Whereas the cable part of the business, linear networks, has shrunk to around 38% of profits. You can see the growing importance of the parks business to Disney as a whole. It's extremely profitable and it's been growing at a really high rate for the last few years. But personally, I don't think that this is sustainable. There's only a limited number of parks globally, and to build new ones takes huge amounts of capex. The limited number of people that you can fit into these parks has been kind of offset by large price rises in tickets and various other add-ons for the parks. As the COVID boom in travel and experiences potentially dies off over the next couple of years, with consumer spending potentially slowing down, will people want to spend as much money on parks? Not necessarily. We also have the cable side of Disney. It is extremely profitable, and despite declining as a percentage of Disney's overall profits, it is forecast by many to increase over the coming years. Personally, I think that these predictions are a little bit short-sighted, as I really think that streaming is the future of the way that people consume media. More people are going to cut their cable costs rather than cut their streaming costs. It's so much easier to watch any TV show you want to watch rather than switch on a cable channel and end up whatever the channel wants to show you at the time. Finally, it would be remiss of me not to mention Disney Plus. Disney Plus is Disney's main hope for revenue and profit growth in the future, with it being a pretty rapidly growing service in the past. However, if you look at the number of users now, it's actually started to tail off for the last 2 quarters. This might not be a cause for panic. After all, the same thing happened to Netflix last year, although they've now started to pick up users again. But personally, I think that the problem is a lot deeper for Disney. Disney is one of those streaming services that still offers its service for free as part of a package with gyms or mobile networks, things like that. You don't see Netflix doing that anymore. And I also look at Disney content and it's really nowhere near Netflix. If you look at the Nielsen top 10 streaming list, even for this week alone, Netflix has 7 of the top 10, whereas Disney Plus only has 1 in Ted Lasso. Overall, I think that Disney content is not really attractive enough to drive user growth in the same way that Netflix does. And I think it may lead to problems in the future. Speaking of content, I want to show this clip, which I think is very true and appropriate from Critical Jinker.
My friends, something is rotten in the state of Disney. I mean, I know that's about as obvious as saying that Saturday Night Live isn't all that funny anymore, but it goes a bit deeper than their simple creative output. All that stuff is just a symptom of a much larger problem, a problem that runs to the very core of the company. Stewardship of Kathleen Kennedy, one of the strongest IPs and biggest pop culture influences in cinema history, has been reduced to a collection of cheap, low effort and mostly irrelevant TV shows on an unprofitable streaming service. Well done guys, it's no wonder there's now rumours swirling around that Disney's actually considering selling off the Star Wars brands.
He's one of my favourite YouTube channels, but I think he really hits the nail on the head here with the problems at Disney. Not only is Disney producing crappy content and killing the goose that laid the golden egg, but it's also cannibalizing its movie business and other parts of the business by releasing shows on Disney Plus that cause people to have oversaturation with various brands and lose interest, such as Marvel and Star Wars. You know things are bad when even the Financial Times are writing articles on the decline of Disney content. And I personally think this article really encapsulates the decline of Disney's brand and moat, in my opinion, over time. So we can see here that previously Bob Iger came up with a branded film strategy, and for 10 years or longer no other studio could compete with them. But now we're on the decline. The creative engines are just not working, and the challenge with the movie business is there's no quick fix. So how can we quantify this? Recently, a movie, Elemental, came out by Pixar, an animated movie, and it did pretty poorly. It is pretty synonymous with other Disney releases such as Lightyear, a Toy Story prequel that grossed only a quarter of the previous installment in the franchise. Even when we look at the actual graphs and quantify the performance of Disney's movies, we can see that there's been a significant decline over time, especially in some of these mega blockbuster IPs that Disney bought, such as Marvel. The peak was a long time ago, back in 2018, 2019, five or so years ago. Even its own Disney branded content, animated old movies, is also on the decline, much lower than it was in 2019. I also think that the most telling decline of a brand has been Star Wars and Lucasfilm in general. They bought the franchise for a significant amount of money around 10 years ago, and ever since then, the revenues have been declining year on year, and they haven't even released a movie within the last 4 or 5 years. They've destroyed the brand, in my opinion. So why is that? I think it's really interesting here because the analyst says it's not clear what's wrong. In my opinion, it's pretty obvious what's wrong, and there's a few reasons why, but I do personally think the biggest reason is because Disney, out of all of the film studios, has been trying to push a political message much harder than the rest of them. That turns off a large portion of their audience, and they're effectively marketing to a smaller portion of the US population and world population. The focus on politics over the story has been pretty obvious, and it's been putting off neutrals as well. So if we compare Elemental, for example, to animated films made by other studios who aren't as focused on politics, we can see that they've been doing far, far better. Super Mario Bros. Made over $1 billion, Minions made loads as well, and things like Puss in Boots came out to critical acclaim. Looking into the financials of the business, we can see that revenue has been increasing at a pretty rapid pace year on year, but Free cash flow has significantly declined since investments into Disney Plus became required. That started in 2019, which was before COVID, so the closure of parks can't even necessarily be blamed for this drop-off. In addition to that, the company has had to take a huge amount of debt out to fund the Disney Plus content, and it's left it right now with the debt at over 40 billion is 40 times the annual free cash flow of the company. The company has also suspended its dividend, and the ROCE, or the efficiency at which the company returns money on investments, has significantly declined to only around 3 or 4%, which is pretty awful. It's below the S&P 500 average. So I really think that the Disney story has significantly changed since it's turned into a streaming business. So some investors may see Disney as a fairly attractive value proposition, but personally, I think it's a pretty hefty value trap. And if you put your money in Disney, I think there's potential for it to be sitting at around the same level or significantly less for a while to come. Things need to change drastically at the company for the ship to turn in any other direction, in my opinion. So whilst I wouldn't bet against the mouse, I wouldn't bet on the mouse either. So I hope you guys did enjoy this video. If you did, please leave me a like and subscribe. And if you agree or disagree, feel free to leave a comment and I'll make sure to give you a response.